Interest rates, specifically the federal funds rate. That's what I'm going to cover today. Hello friends, today is Monday, August 1st, and this is The Deal with Dale. In these weekly videos, I try to keep you updated on relevant real estate information. So let's dive into it. Right now, there's no doubt that the real estate market is shifting, and with that change comes a lot of confusion for folks. So my goal, as always, as a trusted real estate advisor out there, is to help you navigate through the noise. So I'm going to go over some facts about the market. So today we're going to dive into that federal funds rate that we hear about so often. Okay, last week the Federal Reserve raised the federal funds rate by 75 basis points. So what in the world does that mean? We hear about it often. A basis point is simply 1/100th%. The Federal Open Market Committee is the Fed's policymaking body, and they meet 8 times a year to adjust this rate if need be. So that is what was just increased last week. That is not the mortgage interest rate that banks charge on home loans. So what is the federal funds rate? It is a target that the Fed sets for banks to charge each other on money that they borrow overnight to meet their reserve requirements. Because by law, banks have to maintain a reserve equal to a certain percentage of their deposits in a bank account at a Federal Reserve Bank. So that's known as the reserve requirement, and the reason why is to ensure that they have enough money to cover depositors' withdrawals and any other obligations, right? And the federal funds rate tends to have a more direct impact on short-term borrowing rates, like credit cards and car loans. A lot of people think that the federal funds rate directly controls mortgage rates, and I want to make sure and clarify that is not the case. They do not. The Fed does not set mortgage rates directly. They can only hope to influence them. So sometimes the mortgage rates go in the same direction as the Fed's decision, and other times they don't. And a case in point, this week, the average 30-year mortgage interest rate dropped to 5.3%, which was below the prior week, even though the Fed increased the federal funds rate. So that is the key takeaway from today. Mortgage rates dropped from last week despite the federal funds rate being increased. The federal funds rate does not directly impact mortgage rates but can influence them. So I hope that's helpful the next time you hear about the Federal Reserve adjusting the interest rate. All right, take care, everybody. Talk to you soon. Bye-bye.